Welcome to our comprehensive guide on Cuba's tax residency. If you're considering moving to this beautiful island for retirement, work, or just a change of scenery, understanding Cuba's tax system is crucial. The Cuban tax residency is determined by specific criteria that define who qualifies as a resident for tax purposes. In this video, we'll discuss the steps involved in becoming a tax resident of Cuba, the potential benefits that come with it, and the obligations you need to fulfill to avoid complications with the tax authorities. The backbone of determining your tax residency in Cuba is the 183-day rule. Essentially, if you spend at least 183 days in Cuba within a single calendar year, you'll typically be classified as a tax resident. This aligns with many international standards for tax residency. It's important to know that even partial days in the country count towards this total, meaning both your arrival and departure days are fully recognized. Keeping accurate records of your days in Cuba is not just beneficial, it's essential for compliance with local laws. In addition to the 183-day rule, other factors can influence your classification as a resident, particularly if your time spent in Cuba is close to the threshold. This can include examining the nature of your ties to Cuba, such as family connections, property ownership, and your professional engagements. These supplementary criteria are significant, especially if there's a dispute over your residency status, or if you find yourself near the threshold and need to strengthen your position in front of Cuban authorities. Being a tax resident in Cuba has unique benefits, particularly in reference to its territorial tax system. This means that you are typically only taxed on income generated from within Cuba. Therefore, if you have income sources abroad, such as foreign investments or business profits, these may not be subject to Cuban tax laws, allowing for potentially advantageous global tax planning. Moreover, the cost of living in Cuba is generally significantly lower than in many Western nations, enabling expats to enjoy a higher quality of life on a more affordable budget. However, with the benefits of tax residency come certain obligations that you must adhere to as a Cuban resident. This includes paying personal income tax on your Cuban-sourced income, which operates under a progressive system ranging from 15% to 50%. Furthermore, there are property taxes and various compliance requirements, all of which necessitate that you stay informed and seek professional advice if you are unsure. Being well prepared and understanding these elements is vital for enjoying your life in Cuba without unnecessary tax issues.